We look for GPs that are building a firm and not a fund, have that long-term vision. They're thinking 10 steps ahead. If they're raising fund one, they can explain to us what fund two and fund three might look like. Granted, things might shift over time, but we want to see that they have that forethought.
At Context Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how venture capital is changing from the emerging manager perspective. We have interviewed venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, our guest is Renata of Pivotal Ventures. Renata is an investor of Ecuadorian descent who is raised in Philadelphia and has been an investment banker, startup founder, and has also worked in microfinance, social impact, and climate investing. We've interviewed several fantastic guests, but I'm especially eager to interview with Lenore Renata today, as she's been kind enough to join us at DiversiVC the past 2 years. Renata, thank you so much for joining us, and I'm going to jump right into our question, and that is, what does Pivotal Ventures do, and what are your initiatives?
Well, first of all, thank you so much, Tim. Thank you, Lenore. It's a pleasure to be here, and I'm happy to hear that you still want to spend time with me, Tim, after hearing from me the last 2 years at the DiversiVC event. But yeah, to start on Pivotal, as you may know, we are a Melinda French Gates company. We were founded in 2015, so a decade now. It's the first time I can officially say that. But we were always structured in a way that we could deploy different types of capital to different solutions, different gaps in the market. We deploy in philanthropy. We also work across policy and advocacy, and we do venture investments. So I sit on the investment team. We deploy as an LP into women-led and co-led funds, and we also do investments in early-stage mission-aligned companies. And we do this to advance our mission of accelerating social progress here in the U.S. with a particular focus on expanding women's power and influence. So for us, the thesis behind the LP strategy is really about getting more women in check writing roles, with the understanding that we can help create that flywheel effect by having more women writing checks, and then creating a more diverse base of founders getting funded. So that's who we are, what we do. I am based in our DC office. We have our office in Seattle as well, and have been here just almost 4 years.
Fascinating. A few quick questions. One is, are you all doing anything special for this 10th year?
We are. Stay tuned.
Oh, I am. Now I'm really curious. How often do you spend time in the Seattle office?
Not as often as you'd think. I would say probably 2 or 3 times a year for org-wide retreats.
And then is it
most often as you probably can imagine in SF.
I'm guessing Seattle in the summer because it's so beautiful then.
It's so beautiful in the late sunsets. I had never been to Seattle before joining Pivotal, so it's been a joy to be able to get to know that city more.
And within Pivotal Ventures, what's your role?
I'm an investor, so we're a lean team of 5 investment professionals, mostly here in DC actually, which I know is a bit untraditional for the venture world. And I spend most of my time on the LP side. So as I said, investing in women-led emerging managers, and I'm spending a bit more time on the direct side, which I can talk about later on.
One of the things that I notice when I sometimes correspond with LPs is that they're on a lot of AGMs. It's got to be pretty time consuming and energy consuming to do that. But at the same time, it's also got to be very beneficial to go visit the funds and learn from them. I'm curious, how much of your time is AGMs?
We're in just over 20 funds, and between the 5 of us, it's easy to split. So we are always dividing and conquering and trying to maximize people's travel schedules. So I would say it's not too much of my time. Also, I joined at the tail end of the pandemic, and I think a lot of GPs have continued to adopt a virtual first model, or some we're seeing do virtual 1 year and then in person the next. So all in all, relatively easy to balance. I would say it gets tricky during the fall conference season, when then it's not only the AGMs that we're juggling, but a lot of exciting events that we want to attend in person. So that's the toughest part of the year, I would say, from a travel perspective, but otherwise we're able to divide and conquer.
And so you mentioned you all have invested in 20 firms. Can you share some of who you all have invested and why you all invested in them?
Yeah, for sure. I just did a tally. As of December, we're at 23, and those firms represent over $5 billion in AUM total. And on the direct side, we're approaching 10. I mentioned that strategy is a bit newer for us. And in terms of who, most of them, except for the most recent ones, are up on our website. So we try to be as transparent as possible. Looking at the portfolio and the GPs that we are drawn to, I would say they share some core characteristics, right? We look for GPs that are building a firm and not a fund, have that long-term vision. They're thinking 10 steps ahead. If they're raising fund one, they can explain to us what fund two and fund three might look like. Granted, things might shift over time, but we want to see that they have that forethought. From there, just as GPs are always looking for the founder market fit, we're looking for GP market fit. So whether that's deep operating expertise, whether that's investing experience, just looking for that expertise that's going to give you an edge in whatever space that you're playing. And then lastly, I would say we're looking for long-term partners. We come in early and we want to ideally invest over multiple funds. So what does the partnership look like? How transparent are you in those initial diligence calls? Are you responsive and following up in a timely manner via email? Are you receptive to feedback? Because it's a two-way street. We want to help you. We want to get you positioned for your next fund, your next raise. So just seeing how that dynamic is, kind of like how GP partnerships are a marriage. I think an LP GP partnership is also like a marriage. So partnership is really core to that.
What else is important to that partnership beyond transparency?
Yeah, I think on the transparency, letting us know if and when things are going wrong, like as soon as they start to go wrong. No LP wants to hear last minute that, a company is being written down to zero, for example, or that there's going to be a GP split. So bringing folks along, and perhaps it's a conversation for the LPAC, right? It doesn't have to be with all the LPs, but just being strategic in how you communicate things, sharing thorough LP updates. I like to get in the weeds and review those. So I think that's an example. I think staying in touch if they happen to be in DC. We're not on the most frequent, list of stops for VCs, but if and when they're in town, reaching out, stopping by the office, I think is a way to continue to cultivate the relationship as well.
I appreciate that. We get back to DC frequently, so you may have a request for coffee coming up here soon.
Please come by.
How do you all think about LPACs? Because you just brought that up. Do you want to be on the LPACs of every venture firm, or is it selective, or is it like a conversation? How do you all think about it?
Yeah, it's a really on a case-by-case basis. I would say if I had to estimate, we're probably on LPACs for maybe 2/3 of the funds that we're in, approximately. This is just ballparking. I would say because we come in early, oftentimes we're one of the first institutional checks. We'll do a fund one, a first close, things like that. I think because of that, it's usually an easy conversation with the GP about having an LPAC role or even an LPAC observer role. That said, it's not always the case. We've done some fund threes that are significantly larger, have bigger check writers or LPs around the table. So it's really a conversation, what makes the most sense, who of their LPs is going to be the most useful. I think of it as a board of a startup, right? If I'm not going to be the most useful, if you need someone who's going to be the go-to-market expert or the product expert, like I want to cede that spot to someone who's going to help you really unlock and make it to the next level.
What does success look like for the funds that you all are investing in? Obviously, there's a returns component, which is probably the biggest factor, but what are other factors of success?
Yes, I appreciate you saying that piece about the returns, because I think oftentimes because we have a social mission as Pivotal Ventures and because we invest in women-led funds, there's this misconception that must imply that we are concessionary investors. So thank you for making that clear. Returns aside, I would say for us, this is an ecosystem play, right? I mentioned a bit about our mission. We are investing fund by fund in order to change the face of venture. So for us, success 10, 20 years from now is a ecosystem with more diverse faces, more diverse investors, more diverse founders. So I'd say that's the long-term play, that's the vision, that's why we do what we do. But of course, that's impossible without the performance, right? We need these funds to be fund returners, top, second quartile, and we need to have women creating generational wealth for themselves, for their founders, and have that, flywheel effect. So that's the long-term vision about what success looks like for us.
I would offer, I deeply appreciate, your organization, especially what they're doing for women in this space. So thank you for articulating that. I guess I'm curious, what are some other tangible changes that you believe need to happen to increase representation in venture capital?
I've been thinking a lot about this. I don't know if it's the time of year, but I've been chatting with a bunch of, MBAs, recent graduates. And I think over the last decade, venture has benefited from, this popularity. It's all over social media. Young people are really excited about VC, but they're only hearing one story. They're hearing the perspective of the GP, of the investor who's directly investing in companies. And I would love to see a bigger conversation and maybe more initiatives around the allocator role and getting young people excited about those opportunities. We talk about representation, we talk about changing the face of venture, but I think a lot lies, and perhaps I'm biased because I sit primarily in an allocator role, but I think there's a lot of influence as an LP, and that if we don't have, that change in representation at the top, it's going to be really hard for us to see it at the GP level and at the founder level.
Couldn't agree more.
What you said was super fascinating just now about at the founder level. And so it feels like you all are investing at the GP level, the VC level, with the hopes of also impacting on the founder level. Can you talk more about that?
Sure. And, we don't have any mandates. We've done a few funds that do invest in a certain demographic. We're in a female founders fund, for example, but it's not a requirement. So we don't ask during diligence, like, how many of your investments will go to women? That's not a requirement for us by any means. But the data shows that women investors are more likely to invest in women founders. So for us, it's a very long-term play. It's, what the data shows, and we're confident that by backing these phenomenal women who have great operating experience, great investor experience, incredible networks, that they are going to be able to tap in to a more diverse funnel, like at the top line of pipeline companies that they're looking at.
And for the funds that you're in, how do you see the sophistication or maturity changing? Are there certain things that, like, as you have seen them grow and develop and invest, that there's certain traits that you're like, oh, they're picking up on that shows a certain level of maturation?
I would say yes overall. A lot of funds now, at least for me personally, having been here almost 4 years, I'm seeing them come back to market with a new fund. So that's been incredible to see the evolution, to see feedback being taken and enacted on. So that's been great. I think there's also a wealth of resources now for emerging managers that didn't exist maybe even 5 years ago, definitely not 10 years ago. But I think a lot of those programs are helpful in creating a community of emerging managers so they can support one another, but also just like the nitty gritty of like, what does back office look like, and how can I create a data room that's going to resonate with LPs and make sure I include those things that as an LP are maybe obvious and like, oh, all fund managers should know these, but if you're new to it, how would you know? So I think there's a lot of programs and resources for emerging managers, and when we see folks go through those, the transformation is very obvious, and it's been great to see how those programs are uplifting emerging managers across the industry.
I'm very grateful. I got to spend time with the Recast team in one of those programs, and it really was very eye-opening. And very grateful for that support. Other than going through those programs, though, like, do you have any other advice for diverse emerging managers?
I think, first of all, it's important to acknowledge the market that we're in. Tim, we chatted about this a few minutes before we started recording, but almost 80% of funds raised by VCs last year went to established managers. That was a decade high for established managers, decade low for emerging managers. So it's just a really tough market for emerging managers across the board. So that said, my advice would be to first of all, mentally just acknowledge how hard it is and that you're doing a really hard thing, and that's kudos to all the emerging managers out there taking on this challenge. I think the community part is huge. As I mentioned, Recast is a great example of one. Once you're, scheduling those conversations with LPs, I encourage you to do as much homework as you can. Granted, I know a lot of family offices in particular, there's not much on our websites, but to the extent possible, maybe tapping your community, asking, hey, have you talked to so-and-so, to just understand what their portfolio looks like, what their criteria is, and that'll help inform your pitch, right? I think it's, a tough market, so the more you can differentiate, the more you can show an understanding of what's important to them during that initial call, I think will go a long way. And then on a more tangible level, something that we're all used to seeing from startup founders, is the bull case, the bear case, the base case, right? And of course, you're going to make your own assumptions about that. But I encourage GPs to also think about their fund in that way. So what is your minimum viable fund size? And show that to us in your portfolio construction model. The target can be 100 million. And at that AUM, you can make X investments at Y check size. Talk us through ownership levels and all that. But I also want to see it at, 75 million, because realistically, it's a tough environment, and just showing that creativity and that ability to be just flexible and agile, I think, is really important in this environment.
I'm glad both of you mentioned Recast. Courtney joined our podcast. She is incredible, and love what both you and her are doing in terms of advancing women in venture capital. I want to ask a very tactical question that is associated with what you just said around fund construction. Because so much, there's that common saying, I think Mike Maple said this, which is that your fund size is your strategy. And so often when we talk a little bit of the nitty gritty of venture, especially among emerging managers, it's how much follow-on capital are you having in your fund? And so many emerging managers and fund managers have very strong thoughts on this. I'm curious, as an LP, do you have strong thoughts on this?
I do not. And I say that because, as you just quoted, your portfolio construction is your strategy, and there are a diverse range of strategies that you can choose to adopt as a GP. We have backed funds that have reserves of 30 to 40%. We've backed a fund that doesn't believe in reserves. They're like, we invest with high conviction at the pre-seed and the seed stage. We'll consider a follow-on, LP lingo. We'll consider it, but our criteria is going to be the same. We're underwriting to the same requirements, and it's not like we're holding a pool of capital solely for that. So I think as long as you can tell a compelling story, show us a portfolio construction model that works, and we can stress test it, we are willing to be convinced that different models might work for different strategies.
What are some things you feel venture capital should maybe change as an ecosystem? Or what are some things that you think need to be changed in our industry?
Where to start? Something that we're talking a lot about, and something that we'd like to see more of, I would say, is women investing at the Series A and B, or women leading funds that are investing at the A and B, and funds that are capitalized and right-sized. You need a certain level of AUM to be able to execute on that strategy. And I was looking at some data. We don't have it for 2024 yet, but in 2023, the average size of a women-led VC fund was about 40 million versus an industry average of about 240 million. So that disparity is just hurting us all, men, women, investors, founders. And we see that in our conversations with founders, women founders in particular, they get to the A, they get to the B, they look around and they say, who do I talk to? Who is investing in someone that looks like me? And we have a fund in our portfolio, Rethink Impact, and one of their GPs, Jenny Abramson, she's called this the valley of death for women founders. They get to the stage and they look around and there are no investors willing to write that check. So we've been fortunate to partner with Rethink Impact over the past several years, and they're addressing this issue head on. They invest in women founders, they invest at the early growth stages. So I think we need more rethinks. We need more cherry rocks. Tim, I know you know Seda and Stacy, so we're also proud LPs in their fund, but just getting a community of women investors, diverse investors who are able to write those larger checks at the early growth stages, I think would be a huge win for the industry.
That statistic is fascinating, around 40 million median size versus 240 million. And it speaks to that exact problem around Series A. And this is just back of the napkin math. I think to be a consistent Series A investor, you probably need at least 200, but probably $300 million of AUM. And so that math makes a ton of sense as to why there's not enough women investors at the Series A stage.
Exactly.
I do love that you gave that very specific example, because if I think of Jenny Abramson, I think of a classmate of mine, same business school, Renata, that worked while Jared Houston backed her Series B, and like that really made all the difference. So, no, thanks for highlighting that.
Yes, that's huge.
What are some emerging trends, not emerging investors, but trends that are impacting investing that excites you right now, as opposed to something you just said, there's not enough Series A. How about something that's positive?
Well, the positive thing is that Jenny and Heidi, broke records. They're now the largest women-led VC fund investing in women founders, so that's fantastic. Cherry Rock is also raising Fund 1. They have 2 investments under their belt. So we're seeing the tides shifting in a positive direction, which is exciting. On the LP side, we've been spending a lot of time in the climate space as well as women's health. So those are 2 areas that we're closely tracking. And on the direct side, I mentioned we currently focus on the care economy, so looking at tech solutions that alleviate the burden of care for families, with the understanding that more often than not, that burden falls on the shoulders of women. So I've been spending time there over the past several years, really on the philanthropic side of the house. I've had a caregiving team working on this sector even before we started investing. But that goes back to my point earlier about how we've always intended to be creative in the types of capital that we're able to allocate, and understanding that there are times and places for grant capital and times and places for investment capital. So started that direct investing strategy to really look for market rate solutions in the space. Going into this year, we'll likely be expanding our direct strategy into new themes. So stay tuned for that as well. But seeing a lot of potential in fintech, financial inclusion, particularly with how AI can be applied to unlock new levels of personalization and scale, particularly among underserved and underbanked communities and markets. Yeah, that's all I can say on that front, but excited to share more in the coming months.
There's so much I'm waiting with my breath, because you mentioned the tenure, something happening with tenures. You mentioned direct investing, and so this feels like there's a lot of excitement happening. You also mentioned the word creative, and as you describe Pivotal Ventures, it feels very creative and innovative, and clearly you all understand women in venture capital probably better than any other fund or firm. And so I'm curious, and this is a crazy, maybe creative question. Have other institutions approached you all and said, we actually want to co-invest with you all or invest in you all so that you can supercharge your investing in women in venture capital?
As in a new LP, or as in a co-investor with a fund that we're invested in?
Both.
No co-LP proposals as far as I know, but we do have an amazing community of co-investors at the LP level. So we have, I would say, I don't know, a dozen or so investors that we have quarterly calls with to trade pipeline, and we know that we're looking for similar things. Not always, folks might have a different approach to diversity or a different definition, might be focused on a Fund 1 versus Fund 3, but overall, we're on, LPACs together and have co-investments so far. So we're often checking in, trading notes. So I have a lot of collaborators, which is exciting, and especially in this environment, as I noted, it's always inspiring and reassuring to have folks that are investing in the space.
We often get asked as investors, who are some of your favorite startups? And it's always like, we love all of our children equally. And so this is a loaded question. We're not asking you who are your favorite funds. We're asking you who are some of the firms that you think are the future of venture capital. They're innovative, they're creative, they're just getting started, but they hold incredible promise. And maybe a lot of people say in Silicon Valley don't know who they are, but they should.
I think because our portfolio is so new, some of our first fund investments were 2016, 2017. So most of them are emerging managers still. So I would say they're all, to a certain extent, the future of venture. But with that said, I'll share two examples of funds that are top of mind, and I think that they're really doing something innovative and different in the market. One, we just chatted with them yesterday, Samara Mejia Hernandez at Chingona Ventures. They are on a mission to change the way that venture is done, and they are really walking the talk. Something that stood out to me during our call yesterday, and I already knew that this was their approach, but just a reminder and having her walk us through it. But it really starts with the sourcing. They have an online submission form for all pipeline companies, whether it's a warm introduction or a cold inbound. So it's a way to democratize access that I think is very unusual in venture. Venture kind of has historically run on the warm intro, and I think that it has been a barrier for many founders who don't have that network, don't have those connections. So I'd really admire how they are trying to pivot and make sure that any founder can access them and that they apply, a systematic process. The other fund I'll mention, we just chatted about them, is Cherry Rock. So we were proud to come in on the first close for Cherry Rock Capital, and Stacey Brown Philpott, Seda Howard, they are incredible, and they've astutely identified a gap in the market. We talked about the gap at the Series A and B for women, and that same gap exists for diverse founders, for Black and Latine founders in particular. So they are investing at that stage where we've been, talking about this gap, noticing this gap for years. So when Cherry Rock came to market, we were like, this is exactly what the ecosystem needs. They've hired an incredible team. They've got 2 investments under their belt, like I mentioned. So they're just getting started, but really excited about the way that they've set out to build this new kind of venture firm.
I have immense respect for Cherry Rock. We like to think we hustle a fair bit. We go to events, we host events, we go to fundraising things, and every time at an event, I see Cherry Rock, and I'm just like, okay, that's just where I'm going, and I can't imagine the coverage that they have. So immense respect for them.
If anyone's outworking Tim, that's like the highest praise. So. I was just going to jump in and just say, so what are some of the things that funds do wrong? What do you find annoying? What are some of your pet peeves?
Well, I hope this is helpful. Something happened this week. We got a calendar invite on our calendars before we agreed to taking a call. I'd say that is a faux pas. This is more of a personal preference thing, but we prefer to receive the pitch deck in advance so that we can flip through it. We try to avoid at all costs, walking through a deck live on Zoom or on Teams. I mean, this is tough because, you got to crowd in investors however you can, but I think sometimes GPs share artificial deadlines and create this sense of urgency when there really is none. Also being realistic about their timelines that the LPs are juggling at the same time.
I appreciate that one. Yeah, I always feel like that's the advice we get too is, you got to generate that sense of urgency or folks aren't going to come in. But I'm sure that can be annoying. Yes.
I want to build on that. And that is, I've heard I've heard LPs say, this GP is always fundraising. And that makes sense. But I've also heard certain GPs talk about when they need to go to market, meaning like I've now closed my fund, but I think I'm going to go to market XYZ. And then certain LPAs, as we all know, say you can only go to market, say, once 70% of committed capital has been deployed. And so I'm curious, generally, is there a rule of thumb you all have in terms of when there's a final close, how long you expect them to be purely focused on the sourcing, selecting, and supporting rather than doing the continuous fundraise that unfortunately many emerging managers have to do?
Yeah. I would say that you should always be in fundraising mode. Obviously, not as extensively, but I think keeping those LP relationships warm is really important. LPs are notoriously slow. Our diligence processes can drag on. So to make sure that you are top of mind, that you're keeping LPs informed, so that when you're ready for the next fund, you're not, again, to the point of timelines, like you want to make sure everyone's aligned. So if you're bringing an LP along, maybe it's a quarterly 30-minute call, just like, hey, remember me, here's what we're doing. So that when that data room opens up for your next fund, you're not rushing to get them up to speed. So I would say keep that in the back of your mind, have quarterly update calls, check in when you're in their city. And then in terms of the right balance of like when to go back to market or how long to be fundraising, we try to be supportive of our GPs, understanding, again, this market has been very tough. So we've seen lots of extensions. We're at the point in this cycle where GPs are usually fundraising, especially emerging managers, women-led funds. They're fundraising longer than they would have maybe 4 years ago. So we try to be flexible, we try to be supportive, we're always taking reference calls and making introductions. I think once we invest in the LP, we are rooting for you and we're personally invested as well. So we'll go to bat as much as possible to make sure that you're able to close on time, but also if you're unable to get to a significant AUM or close enough to that MVP, we're willing to work with GPs to extend those time horizons.
Just very tactically, like, what's your view on that? Is it like real estate sits on the market too long, doesn't look so good, or, or if it's, hey, if you need to be open this long, like that's what needs to happen, and that's okay.
So it goes back to the portfolio construction, right? If they're a Series A fund, you got to get to a certain level to write a certain check to, and then you need a certain number of portfolio companies to have that diversified risk. So I don't want to say it depends, but it does depend. I think generally speaking, we encourage folks to close smaller and sooner, all other things being equal. But I think that, and we write relatively small checks where we go as low as 25 million in AUM. So we have that flexibility to say, just close, come back to market sooner at a bigger fund size. But of course, that's going to cut you off from other LPs. So it's, again, there's a lot of factors to keep in mind. But for us personally, given the AUM that we look for, given the check size, we encourage folks to close earlier, even on a smaller fund, and just execute, come back with a track record. A lot of the funds that we back, they're fund one, they're fund two. Track record is very new or perhaps, non-existent if they're an operator coming into the investing role for the first time. So to the extent that you can close a smaller fund, demonstrate your differentiation, your edge, your right to win, and then come back stronger, I would lean in that direction.
Thank you.
We want to chat about your career now. And so we'd love to hear a piece of advice you received early in your career that still guides you today.
I don't know if this is advice per se, but more like a leading by an example story. So I was fortunate to work for a woman pretty much straight out of college, and she oversaw a team of mostly men, regional directors, and seeing her not only sit at the boardroom table, at the conference table, but sit at the head of the table and pull up a chair for me. I was 23, and the fact that she did that time and time again just was an incredible learning experience for me, and also a reminder that even, almost 15 years later, if I have a seat at the table, knowing that I also have that responsibility to pull up a seat for the next woman, the person coming behind me, and making them feel included and welcomed, I think that's really important, and that's something that I think we're doing here at Pivotal as well about, backing this next generation of VC fund managers.
Let me just say, like, I've had that same experience when every room I walk into and it's all men and me. At the next event I'm invited to, I show up with three or four of my favorite women.
I love
So
it.
I so appreciate that. Um, what's the hardest part about your job right now?
I mean, I'm sure you two can relate, but the hardest part's always saying no. As our portfolio matures, it's increasingly hard to, create that diversified portfolio. We're looking at, strategically, where do we have gaps? Do we not have exposure? And we don't want to have too many funds in our portfolio at any given time. That's really tough. There's so many incredible women-led and co-led funds out there that we'd want to back, but we have certain constraints. So saying no is tough. I would say, aside from that, I really enjoy the work. I get to talk to inspiring women all day, get to talk to folks like you. So I don't know, I think that's the toughest part.
I want to jump in and say two things. One is Lenore definitely, unfortunately, experiences a lot of being in men-heavy groups, given military veterans. Kudos to Lenore. She always does exactly what she says, and she brings on other women leaders. The second thing is I wanted to double-click on your career and ask, what are some events in your life that have shaped or reshaped your perspective as an investor?
So I started my career in microfinance, and I spent about 4 years in my early 20s, first in Latin America and then in Southern Africa. And that was a formative time in my career, in my life. And I was out in rural communities talking to business owners, understanding what they needed, what they didn't need, and trying to design products that met those needs, kind of meeting them where they were and being really receptive to their feedback. And I think all of that experience, while, in that case we were writing, $50 loans, and now we're writing $5 million checks, I think some of those same values, are relevant. It's about listening, it's about empathy, and really understanding the end user of whatever you're selling, whether it's an investment, whether it's a loan, whether it's a product, but really centering the end user and making sure that whatever you're offering is tailored to them and solving a real problem. I think that those are core experiences that have informed my role as an investor.
We're going to move into some rapid fire questions now as we close this out. So the first is AI is all the rage right now, for better or for worse. We use some AI tools consistently. I'd say Perplexity, Google Gemini, because Google just forces it down on us. Luma for generative AI video. I'm curious, are there any AI tools you currently use?
I was just taking notes on the ones that you're using, because that is one priority that we have for this year. We need to get our tech stack in order. So I'm kind of doing some light research with folks to understand what's working for you all. So I would welcome any advice.
Will diversity in VC improve significantly over the next 4 years?
Yes, it has to.
Love it.
Will San Francisco and Silicon Valley still be the startup capital 4 years from now?
Goodness, this is maybe contrarian and maybe just showing my East Coast roots, but I would say no.
What is your favorite snack, treat, or candy?
Flamin' Hot Cheetos.
You and my 5-year-old. So sorry. All right. So what is your favorite place to travel?
I'll have to say Ecuador. My dad moved back home, and I go there every year to see him and my family.
Favorite bands or musicians?
I don't know about favorite, but I've been really enjoying the new Bad Bunny album.
Favorite movies?
I mean, the Oscar nominations just went out yesterday. I was really happy to see Wicked nominated. So that's top of mind. I'll go with that.
Favorite leaders, historic or present?
Has to be Melinda French Gates, our principal.
Incredible.
I'm consistently inspired by her and feel very privileged to be at her organization.
And the last one, favorite books?
Favorite books? Goodness, that's such a hard one. I will go with a book that I just finished last year. It took me months on Audible. It was one of those 30-hour books. But it was The Warmth of Other Suns. And I thought it was really well written, incredibly informative, and just very thorough analysis of an important time in our country's history.
Renata, so very thankful that you spent the time chatting with us about your career, about Pivotal Ventures, about what you look for in venture capitalists. A lot of the things we weren't able to cover just because of the time, but one of the things that you said on another great podcast, Swimming with Allocators, is that you all have toolkits, and it's policy, philanthropy, and venture. It's great that you all have multiple ways to change and impact venture capital. And another thing I've heard you say is that you really want VCs that have a flexible mindset, that aren't dogmatic about their experience, and take a holistic approach. And you all take a holistic approach on lived experiences and networks. Um, Again, Lenore and I are so grateful you've taken the time. We hope you and the entire Pivotal Ventures have a ton of fantastic announcements, which you all do and will have, and a fantastic 2025.
Thank you so much, Tim. Lenore, this was a pleasure, and wishing you all an exciting year ahead. I know you have some awesome events coming up soon, so best of luck on that.
Thank you so much.
Thank you.